With Bitcoin now rallying higher following a post-halving cool-off period, we're starting to see a lot of similarities with one of BTC's previous bull cycles. So are we about to repeat the 2017 cycle? And if so, how high can we expect price to go this cycle? Today, we're going to be looking at whether we could see Bitcoin repeat the 2017 cycle, and where better to start than the BTC growth since cycle lows chart we have here on lookintobitcoin.com, where I'll remove all of the other BTC bull cycles apart from that 2017 cycle, the 2015 to 2018 cycle to be exact. And we can see here that just by looking at this, we can see some similarities, but realistically, they don't look that similar. We have to look a little deeper on-chain to really see the similarities we're seeing, not only on-chain, market signal, technical factors. There are a lot of similarities here. I know we're looking at this and say, they all kind of look a little bit different. But if we go to something like the MV/RV/Z score, it may become a little bit more apparent why we are now starting to see a lot of these comparisons between Bitcoin's previous bull cycle and what we're currently seeing in the price action. If I just draw, it's already drawn, I'll draw it again. If we just draw where the MV/RV/Z score recently peaked at here, we can actually see very similar run-up we had in this price action to what we saw in 2017 here at the exact same point practically, which indicated that it pretty much the exact same amount of profit that holders had been seeing on their realized price, their average accumulation cost. People started to begin taking some profit initially. We actually hit this line twice in 2017, well, the 2016-2017 area before we eventually broke through and set the all-time high at that period of time. But it's not just that level. We actually saw a double bottom practically in this green buy area, both in that cycle and this cycle. And again, it's been about 18 months in the 2015 in this example to the actually setting at that price point in early 2017. And that's like about 18 months. And again here in late 2022 to early mid 2024, we're seeing a very similar kind of grind to the upside before reaching almost like an early bull cycle peak before a retracement. So that is one definite similarity we're seeing. The second one, if we're looking at the golden ratio multiplier, we can actually see, again, Bitcoin's done something very similar that it did in the previous cycle that it didn't really do in the 2019 to 2022 cycle so much. We can see here that if I just remove those, we can see Bitcoin broke above this 350-day moving average, up to this red line, retraced to the green line, and basically followed this red line until it broke higher. Very similar to what we're seeing in this cycle, where we've come up, hit this 2 times multiplier of the 350-day moving average, retraced to the green line, and hopefully we begin to see price continue to start grinding higher. Unlike the previous cycle we saw where Bitcoin reached this red line very quickly, retraced back beneath this 350-day before rallying higher. If we then look at the Puel multiple, again, similar to the MV/RV/Z score, if I just draw on these lines, again, they're already here, but I'll draw them once again. From where we recently peaked out just before the halving event, we see the big decrease in miner earnings. We can see very similar once again to what we saw here in this 2015-2016 cycle, when miner earnings start rapidly increasing. It's pretty much the exact same point we've seen recently before this big retracement, again, to pretty much the exact same level we've just retraced to. If we see when this actually occurred, again, at the Bitcoin halving event, we go to the stock to flow model here, we can see that this was June 2016. I think it actually occurred in July 2016, but around this June-July period in 2016 is where we're kind of seeing a lot of similarities to where we are now in April-May 2024. If I go to the hodl wave here, we can see, again, another similarity where we're starting to see this kind of curl over after a very huge grind up in this 1-year hodl wave. So over 70% in this cycle of BTC hadn't moved in a 1-year period. It was only about 60% in 2016. But we see this finally turn to the downside. We see some longer term market participants begin to take some profit before it almost flattens out. Again, June, July 2016. There's a lot of similarities in the dates of this just post-halving period in that 2016-2017 cycle when Bitcoin set the, at the time, all-time high just beneath $20,000. Where we are now at over $70,000 with Bitcoin looking to continue climbing even higher. And if we look at something like the short-term hold at realized price, again, we're seeing a lot of investor behavior similar to that previous cycle and not so much like the 2020, 2021 cycle, where we can see Bitcoin's price continue to bounce and rally off of this short-term hold at realized price throughout the entire cycle. Whereas before, in just the most recent cycle, we see a lot of dips beneath this and extended periods of time below it. Whereas again, in this cycle, we're just seeing Bitcoin continue to bounce at this average accumulation price of new market participants, potentially indicating that once they're at a break even, potentially capitulating, shorting the market, it's a great area to accumulate. And again, that's exactly where we've just bounced most recently. And if I just go to the Bitcoin chart here, all of this looks good, but what if we actually overlay that 2016, 2017 cycle onto the most recent price action to maybe see if we are to continue following this, if all of the data, on-chain technical market data is pointing towards us maybe having a cycle very similar to that, when and where can we expect Bitcoin's price to peak? So all I've done for this is got the bars pattern from the halving event in 2016, and overlaid it to when we've most recently had the halving event in 2024. So if I just remove that, we can see it was this date here, 7th of July 2016 to the 19th of April 2024. And what I have done is assuming diminishing returns in BTC cycles. If I just go back to this chart here, we can see in every single cycle, we do see the percentage gains from bottom to peak decrease. And we can kind of anticipate this is going to happen again this cycle, just due to the fact that as the Bitcoin market cap increases exponentially, the required capital inflows to move price significantly higher increases dramatically. That isn't to say we can't see 1, 2, 3, 4, 10,000% gains this cycle. It just becomes less and less likely because the supply and demand economics kind of go against us when the asset class grows exponentially into the trillions of dollars. What we can see here in that 2015 to 2018 cycle, it was pretty much 9,000% from the cycle lows to the peak, whereas in the most recent cycle, it was close to 2,000%. So we can assume probably less than that 2,000% amount. If we just go back to the chart here, what I've done, like I said, is overlay that. And what I've done to kind of try and overlay where we could maybe see these diminishing returns point towards, if I just go to this 2016, 2017 cycle, after we had that halving event, we had this big pullback in the Bitcoin price action, similar to what we've seen very recently over the past few weeks. And I've just lined up that pullback so that they're the same amount of retracement. So we can maybe see that Bitcoin not as volatile as it once was. If we assume volatility is decreased to the level it is now, as we can see if I zoom in here, at the halving event, we assume they pulled back to the exact same price, starting at the exact same price at the point of the halving. We can zoom out and see that following the 2017 Bitcoin bull cycle, we could expect price to top out in late September 2025, maybe even early October 2025, at a price of maybe around $170,000, which is definitely not something I would complain at. And what I was just doing when playing around researching this video, I didn't want to just put an arbitrary number as a potential price target. So what I actually did is if we go back to the golden ratio multiplier, this is actually using Fibonacci numbers, Fibonacci multiplier numbers. So I go down here and we actually get a little bit more of an explanation on this. And it's mainly referencing the golden ratio, 1.618 to be exact, golden ratio Fibonacci number. Now, if I go back to this chart here, what I can do is actually use the Fibonacci retracement tool from the previous all-time high we set in the last cycle to this cycle low we set. If I just zoom out here, we can actually see that this is also projecting a Bitcoin price action peak, that magic golden ratio multiplier number of 1.6 at $173,000, exactly where this overlaid fractal from that previous bull cycle of Bitcoin would project price to top out at. So very interesting, we're getting a little bit of confluence there. And if we were to overlay the golden ratio multiplier and maybe see a little bit of price action following the 2017 cycle, so maybe a little bit of a cool off period, again, it looks very realistic to see maybe this moving averages calm down and top out just as BTC reaches that upper $170,000 level. Also, if you haven't already, please don't forget to like this video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on lookintobitcoin.com, your number one source for Bitcoin information. So just to summarize, this cycle is currently displaying many parallels with the 2017 Bitcoin bull cycle. Looking at both on-chain market signal and technical data, the 2017 cycle is currently the most similar to what we're seeing in the Bitcoin price action for the time being. Of course, this can all change. We could see a huge retracement, double peak cycle, anything like that. We could see something completely new or similar to other cycles, All we're looking at is the current data. That's all we can do. Use the data that is currently available to us to make our best educated guess. And while we're almost certainly not going to replicate the percentage gains of that cycle exactly of 9,000 plus percent, we can use this historical data to better react and potentially anticipate how future price action may look. Investor behavior is quite predictable, more predictable than price action. If we're seeing lots of profit taking in a very similar manner, in a very similar behavior that we saw in previous cycles, we can use that to our advantage. We can start acting as we see these historical comparisons of when profit taking makes more sense, of when accumulating makes more sense, potentially the short-term holder realized price. We can use all of these metrics to look towards turning points in the market to really help time our investments based on when they turned in previous cycles. And if we are to continue following that 2017 cycle, we can expect a cycle peak in potentially September or October 2025. So just over a year, maybe less than 18 months from now, at a potential price of around $170,000, aligning with both that 2017 fractal and that golden ratio multiplier number of 1.6 from the previous cycle's high and low. Although this is assuming diminishing returns, of course, we might not see diminishing returns. If we are to match the previous cycle's multiple 1,000% gains, then it could even potentially send price to significantly higher. If you liked this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to professional resolution charts, advanced macro and portfolio data tools, in-depth crypto industry reports, live and personalized indicator alerts, private TradingView scripts, and more, all for a fraction of the standard industry price. And let me know in the comments below and on social media, are you looking at previous Bitcoin cycles to help you time your trades and investments with a little bit more accuracy? Or do you think that this cycle is going to be completely different due to the new market dynamics of ETF, institutional inflows, illiquid supply, etc.? As I said, let me know how you think price is going to play out in this cycle, potentially when and at what price we might top. And I look forward to reading and replying to all of them. Thank you all very much for watching, and I'll see you in the next one.